The co-founder of BitMEX highlighted that cryptocurrencies could be subject to strong turbulence in the second half of April. This is mainly due to the Bitcoin halving, a scheduled event that cuts the reward for miners in half every 4 years, and the Fed's bag of tricks, likely referring to the U.S. Federal Reserve's monetary policies that can influence the financial markets and, consequently, also cryptocurrencies. According to Arthur Hayes, co-founder of BitMEX, the April Bitcoin halving, combined with a series of actions by the U.S. Federal Reserve and the Treasury Department, will add fuel to a cryptocurrency sell-off and could depress the crypto market for weeks. Hayes wrote in an April 8 blog post that he believes the Bitcoin halving will pump up the price in the medium term, but warned that cryptocurrency prices, directly before and after, could be negative. Arthur Hayes argues that the positive halving narrative is well established, but points out that when most market participants agree on a certain outcome, the opposite usually occurs. Hayes believes the halving also coincides with a time when dollar liquidity is tighter than usual. He outlined his theory on the impact of Federal Reserve and U.S. Treasury policies on markets, suggesting that such actions could contribute to a cryptocurrency sell-off and crypto market depression for weeks. Arthur Hayes believes that the price of Bitcoin and cryptocurrencies in general will collapse around the halving, as this event will add fuel to a sell-off in crypto assets. However, he admits that the market could defy its bearish biases and continue higher. Despite his predictions, Hayes says he is perpetually long cryptocurrencies and appreciates when he is wrong. Arthur Hayes highlighted that the second half of April will be a precarious time for risk assets. This is because U.S. tax payments eliminate liquidity, the Federal Reserve begins quantitative tightening, QT, reducing the money supply, and the Treasury's general account, TGA, which is basically the government's checking account, has yet to be used. These factors combined could create a challenging situation for risk assets, including cryptocurrencies. After May 1, following the Federal Reserve meeting on the same day, Hayes said he expects the institution to reduce the pace of tightening the money supply and that the Treasury will release from the TGA, very likely, another $1 trillion of liquidity into the system, which will pump up the markets. This suggests that there could be a reversal in the Fed's monetary policy and that the U.S. Treasury could inject a large amount of liquidity into the financial system, which could have a significant impact on markets, including cryptocurrency markets. Source: Arthur Hayes/Medium. Hayes said the Bitcoin halving actions of the Federal Reserve and Treasury are the reasons he decided to refrain from trading until May. Despite this, according to data from Cointelegraph Markets Pro, the price of Bitcoin has risen more than 61% since the beginning of the year, going from around $42,200 to $71,170. This suggests that despite Hayes' concerns, the price of Bitcoin has seen significant growth in 2024. Insert a like, subscribe to the channel. The April 9 score shows extreme greed with a score of 80, up from 76 the previous day. The 3-month chart of the index score, as of January 11, shows that the year began with a score of 65, indicating greed, but on March 5 it reached a high of 90, the highest in 2 years. Hayes wrote that if the liquidity scenarios he theorizes were to come true, it would give him a lot more confidence to get into all sorts of bullshit. He also adds that if he were to lose a few percentage points of profit but certainly avoid losses for his portfolio and his lifestyle, it would be an acceptable result. This suggests that Hayes is willing to give up some of his potential earnings to protect his investments during a time of uncertainty. Thank you for joining us on this journey through the world of cryptocurrencies. If you found this overview useful, be sure to leave a like and subscribe to our channel so you don't miss any of the latest news and updates from the world of cryptocurrencies. Continue to explore, learn, and invest wisely. See you next time.